Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor.
Let's go.
All right, welcome to another episode of Future Money, where we talk about the technologies of the future.
We can make you money.
Thanks for joining us again. We have a very special guest today, a special Future Money podcast.
Yeah.
As always, I'm Eyal, managing partner at Gerber Kawasaki.
Hatem, managing partner, and thank you, Jon Grauman, for being here.
My pleasure.
Jon is a good friend and probably one of the most astute real estate agent and brokers I know.
Thank you.
Yeah. Speak personally because you helped me buy a couple houses. But, I've known you for many years.
Yep.
And I could not think of a more timely conversation to have right now with what's going on. So thank you for being here.
Of course.
I want to first congratulate you on your Netflix show.
Thank you.
Tell us a little bit more about that.
It's a little got me blushing right at the beginning. Okay. All right. Fair enough. So I'm going to be part of a Netflix show that's coming out this fall. It's called Buying Beverly Hills.
Nice.
And just give some insights into what can oftentimes be very sort of, cutthroat, contentious world of high-end luxury real estate.
Yeah.
Can't wait.
So they had Selling Sunset, and now they're going Buying Beverly Hills. All right.
There might be a connection there, maybe. Yeah, considering they're both on Netflix. I'm guessing they might, maybe. I'm sure that focus group pretty well.
Yeah.
It's I think what's called a docudrama or a docu-series or something like that.
Okay.
Anyways, we're excited about it. Should be great.
That's awesome. Well, listen, you've always been authentic in the way that you dealt with real estate. You've always given me at least a lot of great information about the market and what's going on. So I want to start there. I want to talk a little bit about the agency and like kind of how you guys view yourselves in the real estate world. And I think your partner also said the other time in your show, the other show, Wine and Wisdom, how being authentic and being advisors, right? To your clients. I've certainly felt personally working with you and working with our clients. So can you maybe talk a little bit more about that?
Sure, yeah. So I am the director of the estates division for a company called The Agency, which many people are probably familiar with here in LA. We're generally renowned as certainly one of the top luxury brokerages in town. And as you just said, we really view ourselves as advisors, right? We're not here to really sell anything to anyone. That's not the job, right? The house is either going to be the right house for you or it's not. If it's not, it's certainly not our job to shove it down your throat.
Right.
Our job is to try to guide and educate and advise people through what is oftentimes, one of the most daunting experiences and certainly the most expensive experiences of their life.
Biggest, right?
Yeah, it's a big life moment. And it's a foreign process to most people that haven't gone through it. So, our two pillars are really just authenticity and integrity. That's what we try to base everything off of. And the rest, kind of will handle itself in terms of whether it's the right time to buy or sell. Frankly, I think that a lot of agents get wrapped up in their own ego in the situation to think that it's about them, and it's not. It's not about us. We're a conduit, right? It's not our place to tell someone whether or when it's the right time to buy or sell or which home they want to spend time in with their families and create their special moments and memories in. Our job is to just try to illustrate and advise them through that.
Awesome.
I mean, you just sold me on a house right now. I just feel like I was going to ask you, what is it about you guys that is unique amongst the thousands and millions of ultimately real estate agents that are out there? But I feel like you already answered that for me just in that brief time that you kind of talked about that. And I think being an advisor to your clients, I use what you do as a parallel a lot to what we do is we're not here to sell you anything. Whatever you invest in, whatever you buy, whatever's right for you is that, right? So just that little blurb alone, I think, separates you from most of the real estate agents out there.
We try. I mean, look, I don't want to start here on a negative, but the reality is I don't think it's any secret that the bar for entry into real estate is far too low, right? If you look at what we do and what you do, for example, I might have one listing that's valued at $20 million, and you may be managing someone's portfolio that's managed at $20 million, right? It's still $20 million and $20 million. I take one test online and poof, I have a license and now I'm qualified to represent a $20 million asset. The amount of licensing and education and testing that you guys have to go through to be able to qualify to manage that sum of money is far greater than what we have to. And unfortunately, it breeds an environment or an industry of a lot of kind of part-time, casual, transient agents, which we're not. We are, as I always say, we're career agents. This is what we do day in, day out, and we take it very seriously.
Yeah.
Awesome.
So let's talk about that. We hear there's more real estate agent than listings
inventory.
Than
inventory.
Yeah, which is to me is just
Crazy. Think about that stat. There are more agents than there are active houses to sell. Right? It's an unbelievable statistic.
Yeah. So how do you go buying the biggest houses of your life, biggest transaction of your life, and not having the right tools or the right person with you, right?
It's hard because, look, everybody wants to work with those who they know, like, and trust, right?
Sure.
In anything in life.
Sure.
So a lot of people, we're fortunate to work in a town where we have price points that you can sell 2-3 houses a year and make a pretty damn good living, right? So you have those
average
agents
house
that,
in LA, what, $1.5 million?
I actually don't know that number, but yeah, it's probably somewhere in that ballpark.
Yeah.
So you have a lot of people that will sell a house to, their nephew's brother's uncle's cousin once or twice a year and make a pretty good damn living. But the problem with that is, how can you be an expert? How can you expect to be a professional that can really guide someone through that process? And it's a challenge.
You just can't. No. Well, let's get into it, man.
Let's do it.
It's kind of a crazy time. We were talking before the show, before the recording about, for us, the stock market is a leading indicator. It's the worst sentiment that we've seen in a long time. Markets are down 20% plus, no matter where you look, But we get asked a lot, what's going on in the real estate market? Is it the next fall the shoe to fall?
Mm-hmm.
Like, I'd love to hear what are you seeing, what's happening, are buyers doing things?
Yeah, you got to remember that real estate tends to be a slow bleed.
Yeah,
sure.
Right. So even though interest rates have, in some instances, doubled since the start of the year, we haven't seen a direct impact on home prices yet.
Sure.
Right. It takes a while for it to settle in and kind of adjust to becoming the new norm. I don't know that there's an adjustment yet that's really been quantifiable.
Right.
The market is literally shifting beneath our feet, and until it finds its footing, I think it's going to be hard to gauge with any level of accuracy kind of where we stand. What I can say is there's a general sense of hesitation in the market right now. The market seems to be pulling back. It's palpable. It's just not quite quantifiable yet.
Right.
I think what you're probably going to start to see first is a dip in the volume of transactions.
Right.
And as that happens, you're going to start to see home prices become reflective of whatever the new demand becomes, the new level of demand, right? At the end of the day, real estate's at the mercy of supply and demand economics like any other industry. And what has been fueling this as of late, amongst several other factors, is that the demand has heavily outweighed the supply.
Right.
Okay, well, that demand is diminishing now, right? So as that demand starts to wane and we see interest rates start to rise, the market will start to adjust and kind of figure out where the new norm is. We just don't know where it is yet. And the ultimate impact on home prices is going to be predicated upon how high rates go and how long they stay there for. We have a pretty good sense of the answer to the first question, right? We kind of know how high they'll probably go. How long they stay there for is going to depend on how quickly they're able to curb inflation and start pulling us out of this.
Right.
That's the unknown.
So arguably, don't you feel? Sorry.
No,
don't you feel like there is a, rates are 5.5%, 6% right now. I bought my first home in 2013 at 6.5%, and I thought I had a good deal. Don't you think there is a misconception that this 2 or 3% that people were getting is just we're not going to have that again?
Yeah,
it's all relative.
It's everything
look,
relative,
the world turns so fast now, especially with technology. People have such short memories.
Right.
And for most people, this is all they've ever known. Like, you look at most of the people that work on my team, most of the people working on my team are in their early to mid 20s, right? Rates have been this low for the last 10 years.
Sure.
They were in middle school when rates were high. It's like, this is literally all they've ever known. So to see rates go from 3 to 4% or 5 to 6%, it can be really jarring.
Sure.
And look, if you look back in previous rising interest rates environments, they did go from 3 to 4 or 5 to 6. We're now seeing them go from 3 to 6 and 3 to 7. And that is jarring, right? That's going to have an impact on the market. But the point that I keep trying to make to people is that this is all intentional and it's all by design, right? The government is putting the economy into a temporary and intentional nosedive to try to curb inflation. It's going to hurt for a little bit, but they're doing that to, again, try to curb what's happening. We've seen the highest inflation we've seen in the last 40 years.
Short-term pain for long-term gains. Absolutely. We want price stability.
That's the hope. Yeah.
Right. I mean, look, I always try to look back with some historical perspective. Okay. Now, I was a mortgage broker during the mortgage crisis back in 2008, which is to say that I had a front row seat for the end of the world. And
That's so true.
at the time, they had to slash interest rates to try to encourage people to buy back into the market and try to increase consumer confidence. And it worked to an extent. But in effort to try to defeat that monster, they inadvertently created a whole other monster, which is a low interest rate environment that people became very accustomed to.
Sure.
As we were coming out of what we thought was the end of the longest bull market we've ever seen, and rates were starting to creep up, then the global pandemic hits, right? Then they slash interest rates to zero. They invest trillions of dollars into the economy to buy up bonds, which gave way to hyperinflation, which is where we are right now. So if you look at what the last 24 months have been, where you've had artificially low interest rates, the lowest inventory we've ever seen in history, meteoric rise in home values, it's an aberration, right? And then basic laws of physics start to come into play, right? What has gone up must start to at least come down some to balance itself. It's just what markets do. They're cyclical.
Totally. And so a couple questions to that. So one is, right, the supply of housing, as you said, was at an all-time low. We're starting to see some supply come on the market, but questions I have to you guys that I constantly think about myself is, if we still maintain a lower supply of houses, right, and rates go up, do we have any major movement in the market, or are we just going to kind of see a sideways market over the next couple of years as demand starts to come and pick up?
Yeah, no, it's a good question. Look, the biggest demand that's being placed on the market, the greatest strain that's going to continue to be placed on the market, which is why I still have great confidence in our market, is the millennial generation. The millennial generation is going to put a strain on our market much greater than what the baby boomers ever did, and the millennial generation is starting to inherit money from the baby boomer generation. So there is going to be all of those people that are coming into their own, who have graduated college, getting established in their career, getting married, having kids, buying homes. So there's always going to be life events that are going to necessitate people buying and selling. People are going to get married, people are going to have kids, people are going to get divorced, people are going to die, they're going to change jobs, they're going to move. Those things happen. So I don't know that there's a wave of new inventory that's going to come to the rescue. We did recently see some commodity prices go down in terms of cost of materials, which is weird in and of itself. Like, people talk about what this recession is, and there's some inverse indicators right now. Commodities went down. Unemployment is down. Like, there's certain things that would ordinarily be indicators to what a recession should look like that this one doesn't, which just always brings me back to center, which is we just don't really know what this is yet.
The market's trying to guess. The commodity prices are ultimately tend to be a function of the fact that, number one, they got astronomically high, where building prices were 50%, 100% higher in some places than they were the year before, right? So a renormalization as supply chains hopefully ease and all that kind of stuff. But also the market's sort of projecting that there is going to be an economic slowdown. There is going to be, I mean, for the last couple of weeks, we even saw oil come down, if you could believe that. And
10% yesterday.
10%, it's down 20% over the last couple of weeks.
It's wild.
And so, kind of like you were saying, that everything is so erratic, it's just kind of moving all over the place, mainly because we're coming from an environment that was completely abnormal. Somebody asked me this the other day, did the Fed screw everything up by doing what they did? I go, well, depends what you mean by screwing it up. Well, we had a global pandemic where the entire world ground to a zero economic activity.
We shut down the world,
We shut the world down. So we created all these things to try to help the economy continue to go on. Well, now we have inflation. I would say that that's probably a better outcome than having the entire world collapse or having 50 million people die from COVID.
Yeah, I mean, again, what I always kind of come back to is we've never been here before. We've never been at we've never been at the tail end of the longest bull market in history, coupled with a global pandemic, coupled with the highest inflation we've seen in 40 years, coupled with the lowest inventory levels we've ever seen, coupled with a backlog supply chain and a war in Ukraine, and like, we've just never been here before, right? This mixture of all these different variables and factors, it's kind of hard to know.
You mean need to know what's going to happen?
And I was about to say, and then our clients wonder why we couldn't have predicted the down market. Like, there's 400 variables here.
I mean, look, the one thing that I think that the Fed did screw up on, and I'll just go out on a limb here, is, look, it's a lot easier to get ahead of inflation than it is to stop it.
Correct.
And had a year ago they started raising rates a quarter per quarter.
Yep.
Right? Nice and gradual. Let's ease our way into this, right? Don't throw us into the deep end.
Yeah.
Like, I think they missed the boat on that,
Do you
frankly.
the
I think
inflation,
everyone
the T
agree.
word, the inflation is the T word, which we don't say anymore because Jerome Powell's not allowed to say transitory anymore ever again.
I think you're absolutely right. Like they missed the boat on that.
Yeah.
Everyone knows it's a policy mistake. But let's go back to what you said, because I think one of the reasons I really wanted to talk to you is a lot of the question is do I buy now? Do I wait? You know, and we get this in the stock market, and we always say, listen, you can't time the market. Yeah, you can take it easy, you can dollar cost average, but with real estate, you know, the cost of ownership, which we think is the most important thing when it comes to real estate.
Yep.
How much does it cost you to own this house,
That's
right? Has gone, you know, twice, maybe 50% to 100% up over the last, you know.
It hasn't actually been that much, and that's one of the keys in what we do is really educating people because there's so much information out there and there's so much misinformation out there.
Right.
And, you know, look, again, we don't know the impact this is ultimately going to have on home prices. As I said, it'll be predicated upon how high rates go and how long they stay there for.
Yeah.
But let's at least look at it on a chart. Let's look at if rates go from 6 to 7 and values come down 5%, 10%, 15%. How does that affect your monthly payment? Because like you said, at the end of the day, that's what people care about.
Right.
Is this affordable to me on a monthly basis as it relates to my mortgage payment?
Right.
So we've created a chart, which I'm happy to share with you guys, and you guys can obviously share with your clients, that shows and illustrates, okay, based on $1 million or $5 million or $10 million, if rates go from 6 to 7 and 7 to 8, but $5 million goes down to 4.5 or goes down to 4 million, how does that actually impact my payment? What you'll typically find is that it makes more sense to buy in now while the interest rate is still lower, right? I'm not going to say low because people don't really associate that anymore, but certainly lower than where we expect them to go. It makes more sense to buy in now because ultimately the market's going to recover. And real estate, if you look at it historically over a 7-year cycle, has always gone up. Sure. Meaning that if you bought on the eve of the Great Depression, within 7 years, it's worth more than where you bought it at. Right? So the market will do what it's meant to do. But if you're most concerned about how it affects your monthly affordability, you try to capitalize on the lower interest rate when you can.
Right. I love that's how you said it, because we correlate that the same in the stock market, right?
Yeah.
It's really about time frames. How long do you have for your investments to work its way out, right?
Yeah.
If you're thinking you know what's going to happen the next 6 months, you're probably wrong. Or maybe you get lucky.
Maybe you get lucky.
Yeah, lucky is good.
Broken clock, right? It's right
Yeah,
twice a day.
There you go.
Lucky. And you can have an educated guess too, I guess, you know?
Yeah, totally. But a lot of people made their famous names, prognosticating and calling the tops of markets and doing all this stuff. But what people don't realize is they got 20 other things wrong, and the one thing they got right, that's what everybody remembers.
Yeah, exactly.
So buying, this is kind of what we've been telling our clients. We have a ton of clients who are millennials who are building their lives, careers, families, and so forth, who need to own bigger homes, maybe move up to a bigger place or buy a first home or whatever. And we're telling them, if you're going to be there for 5 or 10 years and you can afford it today, you go for it. There is no reason for you to wait for a 5 or 10% or 20% correction. It doesn't make any sense.
This was the same conversation we were having before rates went up. We were trying to explain to our clients, listen, nobody wants to overpay, and we certainly don't want you to overpay.
Right.
We want to guard against every penny we can save you. But if the difference between getting the house versus not getting the house is 5 or 10 grand, and you're borrowing it at 2.5%,
right?
Who cares?
Yeah.
Get the house,
right?
Because this is going to look radically different in 6 or 12 months when rates are at 5 and 6%. And sure enough, there's a lot of people now going, damn it, I can't believe I was penny wise and pound foolish about it.
Exactly. And I think it's important to, again, a couple things. So one is obviously it's difficult to time the market.
Yeah.
But there is a sense, is going back to what you said, is that it does take some time for this new normal to sort of trickle into real estate versus, once again, the stock market. News comes out, boom, the reaction happens. The market is forward looking. It's trying to predict. Real estate is kind of the opposite.
Yeah.
Real estate needs a lot of things to happen until it actually trickles down through to the buying. And the example I love to use, and obviously the financial crisis is a very extreme example of this, but the stock market bottomed in March of 2009. Mm-hmm. The real estate market didn't really bottom until the beginning of end of 2011, beginning of 2012. Right. So it took that long
slow bleed
for the difference to happen. Now, once again, that was a housing crisis. So that's probably the most
Financial
extreme.
crisis, even more, right?
Totally,
Right.
but the housing and the mortgages and the ninja loans and all this.
Sure.
For those of you who don't know, the no income, no job loans, what they called ninja loans, people with no incomes buying homes that they couldn't afford, and people just writing random numbers on applications. That was the worst case scenario that could happen for real estate.
Yeah, and these are obviously entirely different
Correct.
circumstances, and that's one of the things I always try to remind people of, because again, a lot of people have short memories.
Correct.
Yeah.
Like I said, the world moves very quickly these days, and for a lot of people that are buying in as millennials, they don't remember
Right.
the mortgage crisis. They weren't, in
Correct.
the workforce when that
Right.
happened.
Yeah.
And look, I think when you say the word recession, people automatically think back to the last recession because that's their closest association with it. Well, the last recession was the single greatest financial crisis we've seen since the Great Depression.
Yeah.
These are entirely
Totally.
different circumstances.
Totally.
As we were talking about earlier, the banks are very well capitalized.
Yep.
We're stable on that front.
Correct.
This is just trying to curb against hyperinflation,
Correct.
which was, again, I think kind of stemmed from being in too low of an interest rate environment for too long
Yep.
and giving rise for things to just meteorically accelerate.
I mean, we had clients who would literally had large stock portfolios and were borrowing at 1% and 2% to buy houses with
Right.
their borrowed money.
Yeah.
Yeah.
We had people wanting to do this, or people wanting to leverage up their stock so that they can, purchase other things that ultimately, that's not normal. That's
not
not supposed to
sustainable.
happen.
No. No.
And that's ultimately a healthy thing in the economy. And like we said, it hurts when it's happening.
Yeah.
But it needs to happen.
That's right.
Yeah. So great insights. Are you seeing people right now basically pull back then on mostly sellers? Are sellers, because if you have a 2 or 3% interest rate loan, you're less likely to want to sell because
Sure.
Is that something you're starting to see?
Yeah, definitely. I think that, whenever anything feels uncertain, the natural human response is just hesitation, right? People just want to pump the brakes. And I think that's what we're seeing everything do right now. I mean, look, you guys know as well as anyone, there's two things that drive the market: fear and greed. Okay. So if those are on opposing ends,
Right.
what's stuck in the middle is uncertainty. And that's where we are right now, right? Fear, greed, uncertainty. And that uncertainty, again, just the natural human tendency is to just watch and wait.
Yeah.
So I think that's what we have a lot of people doing right now, is just like, I'm not sure where this is going, right? I want to know what the weather is before I walk outside. So let me just see where this goes first. And once the market kind of finds its footing, because I believe that whether you're in an up market or a down market, that market can perform really well, as long as you know which market you're in.
Yeah.
I just feel like people don't know what market they're in right now. And again, to your point, for those that locked in really low interest rates, they're feeling pretty cushy right now, right?
Yeah.
Okay, I'm in a good spot.
Yeah.
Again, we live and work in LA. My office is based in Beverly Hills. I transact a lot in the Beverly Hills, Bel Air, Brentwood kind of areas where, you have a lot of people that don't really need to sell.
Yeah.
And I always say you can define a seller by their level of motivation, right? If you're a motivated seller, you're a real seller, because you're going to respond to what the market's telling you. And if there's one fundamental truth in real estate, it's that the market will always and ultimately dictate what a home is worth.
Yeah.
Not you, not me, not your Zestimate. The market's going to dictate what it's worth. What? I know, crazy. And, you have a lot of people in that high-end arena that, as I've said before, have a very high level of expectation and a very low level of motivation. And those opposing forces, oftentimes create a stagnant market in the high end. And I think you're going to find a lot of the wealthier people are going to go, I'm just going to sit and hold tight because I can, because I don't need to.
Yeah.
And they're probably doing the same thing with their stocks.
Yeah. It's funny you say that, because what you're saying, this level of uncertainty or inertia, is what we've seen the last 6 months for us.
Yeah.
Because people were they had cash, but they didn't know where things are going, so they didn't want to invest, they didn't want to do anything. We're starting to see people come out. It's like, I have some cash, things are cheap, I want to kind of start jump back in and so forth. So you're almost 6 months, we're 6 months ahead of you as far as it's kind of...
Yeah, and that's what takes time. But on the other side, I have people telling me that we're going into a depression, and I'm going based on...
There's a lot of emotional...
No, but that's the point. That's exactly what he's talking about, right? There is... fear and greed is what you talked about. My argument always, for you who, just met me, my background's actually in psychology. I have a master's in psychology. I always say fear and greed are actually the same emotion. one is just a fear of missing something, and one is one is just pure fear.
That's interesting.
So
That's interesting.
So to me, the fear is always the same.
Yeah.
The fear is I'm not going to have as much as you have. If I don't buy this meme stock in February of 2021 and it's going to go up 100, 200, 300%, everybody's going to be in on this and I'm going to miss the boat.
Right.
Versus now it's everything's going to go wrong. And I screwed up here and I'm going to screw up here. So I'm just going to do nothing, kind of like what you said.
Yeah. And look, you're never going to know when the market is at its peak
Right.
or when it's at its low until
Correct.
it's in your rear view.
Exactly.
Until you can look back with some perspective and go,
Hindsight, baby.
there it was. It was in November of last year.
Yeah.
Right. That was the peak.
Totally.
But you don't know when you're in it.
Yeah.
So, yeah, I think that, again, you're going to probably find, look, if you look at what's occurred in the last 2 years during COVID, it was really just a widening of the wealth gap, right? The rich got infinitely richer.
Yeah.
If you look at, I'll give you some crazy statistics as it relates to my industry. We sold a house in Aspen last year, which is a teardown for 13 some odd $13 million. And literally. And I was out there talking with one of our colleagues, and he said, on average, we typically sell 2 homes a year north of $20 million. He said, in the last 12 months, we've sold 24 homes north of $20 million. Right? Yeah. It's a staggering statistic, but I think the people that played it right, and there were some big winners coming out of COVID, are in a really cush spot where they're just going to kind of watch and wait. I do think that the high end will continue to transact because the people with those sort of means want what they want. Plain and simple. I also think that good product always wins the day. Right. That there's a lot of, look, it's subjective, of course, but if you have something that's really good, beautifully done, and in my experience in a town like LA, the one thing that always sells for more than anything else, more than privacy or view or anything else, is style. If you have something that's just styled to the nines, just completely designer done, like Architectural Digest worthy, it sells, and it's going to sell at a premium.
Yeah.
So I'm not concerned in
There's
that
a lot of
respect.
money in LA. That's kind of the reality, right?
Look, I'm 4th generation from LA. It never ceases to amaze me the astronomical amount of money that exists.
You
in
are
this
an
town.
endangered species. I don't think I've ever met somebody who's 4th generation LA.
I know.
That's crazy.
Yeah. It's a rare, I'm a rare breed.
People are surprised when I say I'm from LA. Like I was born in LA. They're like, wow, there's not a lot of you guys.
Right.
So there's definitely not a lot of you.
No, very rare.
That's it. So you mentioned Zillow, Zest.
Before you go there, because you're talking about LA, right? I want to ask you about, and you obviously transact all over the country.
Yeah.
During COVID, people fled, right?
Yeah.
That was the demise of LA, the demise of New York City, of all these. That obviously didn't happen, right?
How do you mean it didn't happen?
Like the prices haven't gone down.
Oh, sure. Okay, gotcha.
You know what I mean? So can you talk about, are you seeing a lot of people just trying to still go other places because they can work from home and so forth? Is that really?
I think one of the interesting things that happened during COVID as it relates to real estate is that it just, all the borders came down, right? All of a sudden you didn't have to work within 15-minute drive of your office, right? You could have an office in West Hollywood and work out of Boise, right? So all of a sudden, all of those markets, Boise being one of them, Austin, Charlotte, Nashville, I mean, the list goes on. Vegas has exploded. They all started skyrocketing in terms of demand and in terms of prices.
Is that sustainable though? Like, do you want?
Where's the working from home trend going? I was sort of cheering when Apple came out a few months ago and made a big statement and said, time to get back to work. Right? Because for me personally, I like working in the office and I like having my team and my staff working in the office because it's hard to create that sort of camaraderie via Zoom. Right? It's hard to feel like you're a part of something or a part of a culture when you're just interfacing via Zoom, which you usually only do when there's a problem to solve. Right? So you're not there when it's just like the banter and the laughter and whatnot. So I don't know if it's sustainable. I think that we've obviously seen a lot of big companies come out on different sides of the aisle. Right? It's a divisive issue in terms of certain companies have said, we're fine with working from home forever, and others that have said, time to get back in the office.
Right. I think we might have had a peak to the work from home life, right? So as far as projections from here, are we going to see infinitely more work from home people? Probably not. We're probably going to see the same or less as people.
This is maybe my opinion, but if I'm 35 years old and I woke up and I say Boise, nothing against Boise, I want to really get out and go out and have a
somebody
nice.
was telling me
Yeah,
Montana's the new tough spot, and I'm like, listen, no offense to Montana, but have you looked
people watching
outside here?
Yellowstone.
Yeah,
right.
exactly. That's it probably has something to do with it. But I think that's right, and that's what I already have a couple clients who, you know, either they bought houses outside of LA, they bought it in Palm Springs or like Arrowhead or Aspen or any of these places, and they turn around and sold them because they doubled in value in 2 years, and they're like, well, this is crazy, and I should sell this because I made it out like a bandit here.
Yeah.
And maybe kind of seeing that, you know, during COVID, obviously everything was weird. You know, we all worked from home, but our home was not only our job, it was our home, it was our job, it was the kids' playground, it was the kids' classroom,
Exactly,
it was where we hung out with our friends.
Yeah,
or,
so
or
the
not
type
hung
of
out.
home must be different now.
Right.
Like, are you
Yeah,
seeing
for
it?
sure. Oh, yeah. A lot of new construction now, accounting for those kinds of things,
Correct.
you know, accounting for at least one home office, if not
Yeah.
two,
Yeah.
you know, but to your point, you know, COVID really forced everyone to kind of reassess what home means, right? If I can't go to work, I got to have a home office.
Yeah.
If I can't send my kids to the park, I need a bigger backyard.
Yeah.
If we can't go to the beach, I want a pool.
Right.
So
Right.
COVID's, again, it's interesting. It'll be very interesting years from now to look back
Totally.
at the trajectory that we went on when COVID hit. And, you know, again, there's pluses and minuses to it, but it definitely has made a lot of people reevaluate what home means to them and where home needs to be.
Yeah.
Yep.
Yeah, totally. I do think that, you know, and I'm starting to get some people who are like, okay, I did the whole, you know, I lived remotely and I did the thing, but I think it's time to get back to
I saw this
my
morning
original life.
I saw this morning a stat that Austin had starting to see a decline in home prices.
Yeah, it
an
doubled.
increase in inventory.
Yeah.
You know,
Yeah.
Austin. You know, some of these kind of areas
Totally.
that
Yeah.
obviously has gone up quite a bit. So
Yeah, they've gone crazy, right? And just like anything else, like there's gravity wherever you go, right? At some point, like you said, what goes up must come down some at least.
Yeah.
Because that's not sustainable. Where
Yeah.
people, especially in places like Texas and Austin, where they reassess property values every year.
Yeah.
Which is crazy. A lot of people don't know that. The people who are watching this don't know. Like, you know, for all the crappy taxes we pay here in California, which are pretty much all of them, the one thing I positive we have is the 1.25% in LA
13
property
on the real estate
taxes
tax.
and not reassessed every year, right? So
Yeah.
you bought a house 20 years ago or 10 years ago, doubled, tripled, quadrupled in value, you're still paying the same property taxes. Well, the people in Austin, I've talked to clients and friends who live in Austin who bought a $1 million house in Austin, and now it's 2, and now their property taxes are 2.5 to 3% of that money now.
Yeah.
And that's crazy.
Yeah.
Like that's a big number.
But also, you're not paying any income taxes.
Not
So
taking
you gotta-
taxes,
yeah,
but that's
you
my
gotta-
point, right?
yeah.
Is that, you know, Texas is always sort of hearkened as this, you know, this place where you go and not pay a bunch of taxes. But if you bought a house in say Austin 10 years ago, it's probably up 4x from where you bought it.
Yeah.
And
Yeah.
now you're paying 4x the property taxes at 3%. It's not a 10% state tax like we pay, but it's closing the gap significantly.
Yep.
So, but
so
I
let's
think we're
move on.
starting to see the sort of people come back to the cities a lot more than they were. People thought San Francisco was dead and New York was bit. LA was always less because LA is not a what we call, you know, LA is not a vertical city, right? It's a horizontal
Starting
city.
to become one, though. That's the
It's
thing.
more
is that,
so.
like,
So we saw downtown got hit a lot harder, right,
Sure.
than say Santa Monica or Brentwood or those
But it's
places.
come back though.
Well,
no?
downtown,
Come
look,
back,
there's two things that truly differentiate LA from any other major
Yeah.
metropolitan city in the world. One is we're the only major metropolitan city in the world that doesn't center around our downtown.
Right, exactly.
Right, downtown's just kind of off in the distance and a
Yeah.
bit
It's
of an
the thing that I
it's
don't
very
even go to very often.
geographically inconveniently
Yes,
located.
correct.
The second is that we have this gigantic mountain range running
Yeah.
right through the middle of our city, right? You know, that we call it the hills, but it's you know, the
Yeah.
Santa Monica mountain range. So I think that this city, which is historically, as you said, always been very horizontal,
Yeah.
is going to start to go vertical because everything in LA has always spilled east,
Yeah.
right? When Venice got outpriced, people spilled into Mar Vista.
Right.
Yeah.
When West Hollywood got outpriced, people spilled into Silver Lake, right? It's just sort of been the natural progression.
Yeah.
We've run out of real estate,
Yeah.
right? Now it's like this new Silver Lake has become the Mount Washington,
Yeah.
Eagle Rock area, but past that, you're in Pasadena.
Yeah.
And now we kind of go, okay, well, I'm not in LA anymore, right? Like, Toto, we're not in Kansas anymore.
Hey, well,
Like,
the Rose Bowl is in Pasadena. Yeah, that's right.
so I just think that you're going to start to see, I mean, we already are. There's a new trend happening right now. It's actually really interesting of the first wave of these ultra high-end, full-service condo buildings.
Yeah.
Right. So they're
Like the ones in Westwood kind of thing, or?
Yeah. So, I mean, before we only had really two. There was the Ritz-Carlton downtown and there was the Montage in Beverly Hills. That was really it. There's now the Edition, right, which came up a couple of years ago, Ian Schrager's hotel up on and condos, and those sold out relatively quickly and at like $3,000 a square foot. But you have Reflections of LA.
$3,000 a square foot?
Oh yeah,
jeez.
Reflections of LA, which is the Four Seasons project, which is right behind the Four Seasons off of Doheny.
Okay.
There's the new one in Century City, which is a Fairmont project. There's 8877 Beverly, which will probably be the most expensive building in LA. There's the new Mandarin Oriental on Wilshire, which we actually represent the residences on. And again, those will be trading at around 3,000 square foot on average.
These are like New York prices. Like,
no, New York would be 5,000-6,000 a square foot. But
Still.
for us, you know, the draw of being in LA is the weather. Thus, you want to be outside. So the attraction to being in a condo has never really been all that valuable. But I think we're starting to see a lot of people, very affluent people, that are just saying, I just want to land in Launchpad. I just want a base here. So I can just close this up, lock it up. And when I get there, I have all the amenities that I need or want. And
interesting.
It'll be interesting to see how it's received, because there's a wave of them that are about to come to market.
That's amazing.
Yeah.
So you, I mean, obviously we talked about inventory and supply and demand at the beginning of the conversation. There is definitely a huge demand. And I think this whole household formation over the last 10 years, we haven't built enough homes the last 10 years. That's the reality, right? So demand is always going to be there, and we don't have the supply for it. It takes a long time to build homes, right? So do you think this kind of model will really work in LA, like just condos? And
No, not necessarily. I don't think that it solves the issue. You know, we haven't built enough homes, but as I said a moment ago, we're out of real estate, right? We can't go any further east, and we sure as hell can't go any further west. There's a big ocean right there, right? So we have to work with what's existing, which is why in every neighborhood in LA, you're seeing these older homes get knocked down and these big McMansions being put up in their place. So I think that it's not going to solve the issue. It's just one way to take a whack at it, right? It's just one way that they're trying to address it. And it'll be interesting to see a city that starts to go more vertical, right? It not only affects the quality of life, but it actually starts to affect the quality of light. Right. If you think about what it is to walk down the streets of Manhattan, everything's in the shadows, right? Because it's all big, tall skyscrapers. I'm not saying LA is ever going to look like that, but there are going to be parts where you're going to start to see that LA just takes on a different look.
Once again, if you go to downtown, it looks very different. Downtown LA versus Santa Monica versus Venice versus all those places. You're right. The light thing is a significant issue. It's one of the reasons that I never liked New York City, other than just visiting and having a good time. There is the density and the fact that you can't see the light for most of the day in most of the city.
Yeah. And it's one of those things that, you know, because I'm on the front lines of this every day, I'm, you know, walking through homes with clients every single day, and you look at the things that are important to them, and sometimes they're things they don't even know, they're not even conscious of, but natural light, grass. Everyone, it's just the grass light. I'm telling you, green grass is just one of those things that you
even
just
if it's
see
fake.
I will never forget this. When you helped me buy my house, you went to the backyard and you brought your iPhone and you put it towards the sun, and you basically looked at how far is the sunshine going to be in my backyard. I had no idea to look for this. You know,
that is concierge service right there.
Wow, I was like, you want to make sure. I will never forget that. So
there's a great app. It's called Sun Scout, and it'll show you where the sun is going to be in the sky any hour of the day, any day of the year. So you want to know, like, well, what is it in wintertime? How low is the sun? Because again, this is the quality of your living in this home. How much am I going to be outside? If it's 4 o'clock in the afternoon, is my son in the pool? Right? These are the kind of things that, like, you want to look at.
You know, I love that. Like, that's, you know, again, when we talk about, like, what do you get for your pay? Because ultimately, you know, the sort of commission for real estate is, you know, it's uniform across the board, basically, with some alterations. But in general,
there's a standard.
But, like, that's, you know, those are things when we talk about concierge or white glove service, right? It's like, who would ever think of saying something like that, right? It's, you know, so real estate people are sort of painted as a dime a dozen, but it's something even so simple. that has that connection with people that Hatem remembers 2 years later now, or
Yeah, I love
whatever
that.
it is.
I love that.
I mean, also I remember the negotiation, bro. That's also another way. I would never. John's a good negotiator. I'll tell you that.
Well, that's the good part.
Yeah.
That's
Part
the
of the
big.
job.
That's what we call the investment management part of the of our portfolio management versus like the financial planning, right?
Yeah,
exactly.
little
It's a
extra
chess
stuff.
game. It's just a chess game.
Yeah.
You just got to be anticipating the next, the other player's move, and you got to be thinking 3-4 moves ahead, and that's just the nature of,
Yep.
Yeah.
Yeah, there's a strategy. There's absolutely a strategy, and you got to know what the game looks like. And like for John, for example, we deal with a lot of builders, right? So there's a different strategy there than dealing with just
Very.
Yeah, exactly.
Builders are one of the most unique breeds of people in the world. 99% of the time, the sky is falling. Right? The market's going to tank. Price, like the cost of goods has gone up. Until that last 1% when the house is just almost done, and they're the biggest optimists on the planet. We're going to set a new record. We're going to smash them all. It's like, what the? I mean, I swear to God, it just goes from
amazing.
like Jekyll to Hyde.
That's so funny.
That's amazing.
So that's I think is a good segue into what I wanted to talk about also is the disruption in real estate,
Yeah.
or maybe I should say lack thereof. But people are trying to disrupt real estate. They're
Yep.
trying to make it more efficient. It is a system that's kind of based on rules that haven't changed in a very long time for the most part.
Yep.
So you have your usual suspects, your Zillow, your Redfin, Open Door. In the past, we've looked at these companies to see if they were viable investment ideas. It turns out that it's very difficult to actually sell a house
Redfin lost
digitally.
90% of its value.
What did? Redfin, yeah.
90% of its value, is that right?
I mean,
Wow.
all those companies, and during the pandemic, these companies spiked and went crazy because it was kind of in the crosshairs of both. Like it was the perfect intersection XY axis of technology stocks that were going through the roof and real estate markets that were going through the roof.
Yeah.
So you had Zillow going up like an Open Door like 4 or 5x.
Yep.
From the bottom to the peak, and then of course just gave everything back and then some. And Zillow somehow managed to lose money in buying real estate in 2020 and 2021, which that's pretty
I think
difficult.
John
to
has a
do.
good
Yeah, with
opinion on
Zillow
that.
offers
We talked
and-
about this before.
Yeah.
Yeah, I mean, look, technology is coming for all of our industries,
Yeah.
right? Your guys
Sure.
included.
Yeah.
And there was definitely some concern, at least early on, of, are we going to go the way of the travel agent that went the way of the dinosaur? But I think that what we're finding is that there's still a very human element to what we do. Real estate, technology has now become a platform for people to find real estate, right? To look at real estate,
Yeah.
and everyone is. I mean, like,
Sure.
like that. I think I can just say that like
Saturday
across the
Night Live,
board.
dude. That
Real estate's basically become like the new porn.
Yeah,
like everybody is on Zillow and like it's
good.
I mean, people
the Zillow
are
sketch.
yeah, and people
So good.
right? You saw that.
Yeah.
And like people that are on Zillow aren't just casually on Zillow. They're on it
Yeah.
like 18 times a day.
Yeah.
And what made Zillow or Redfin or any one of those companies what they are, in my opinion, is a couple of things. One is a really friendly user interface.
Yeah.
Sure.
Right. The MLS, which is what we use, is frankly really clunky and it's not that easy to navigate. Zillow's just couldn't be. It's dummy proof.
Right.
They also came up with one of the most brilliant algorithms of all time, which is the Zestimate.
Sure.
Everybody wants to know what their home is worth
Yep.
in real time, as it turns out, and it doesn't quite
How
work
fun
that
is that
way.
for
But
How many times a day do you get the question, well, Zillow says my home is worth
today? But look, kudos to them. It was very clever, and it has given them a lot of power in this market.
Yeah.
And I've always been a big believer in the golden rule, which is he who has the gold makes the rules.
Right.
And they have the gold right now.
Or she.
Yeah. So, we are partners. Zillow's a partners of ours. And that's an interesting story in of itself that I'll just make very quick. So Zillow had a platform for years that was what they would call market-based pricing. It's what you and I would refer to more commonly as just pay to play.
Yeah.
Right. So as an agent, I pay you $5,000 a month, and in exchange, you give me 22% of the leads in 90066.
Right.
The problem they were finding is that the vast majority of the time, those leads were going to agents that were doing nothing with them, literally nothing with them, which goes back to the bar of entry that we spoke of earlier. In fact, they found that 52% of the time, that person that was making an inquiry wasn't even getting so much as a return phone call.
Wow.
Okay, so think about that. Zillow at its core is a technology company. So if you equate them to another technology company like Uber, imagine if you go to order an Uber and they only send a car 48% of the time.
Isn't that happening right now?
Yeah.
But imagine you just be like, well, screw this. I'm just going to go use Lyft. Well, Zillow was experiencing the same problem, right? The consumer doesn't know that there's an agent not doing their job on the back end of this. Right. All they know is I went on to Zillow. Zillow didn't get back to me. Zillow failed me. Zillow doesn't work. I'm going to Redfin or Trulia or what have you. So they made a dramatic shift in their platform and started aligning themselves with agents like myself who they know and trust to represent them of a certain caliber, and started partnering with agents and saying, hey, let's do this together because we can't exist without you and you can't exist without us.
Right.
So I don't think that one has to exist to the exclusion of the other.
I love that. Providing tools to make you better at your job. You know, maybe bring the client to you who's motivated to buy and then give them an agent that's capable.
I always say this when people ask us about technology and things like that. I say, you know, we use technology to enhance the user experience. It's not to seek to replace it.
Exactly.
Ultimately, because people need to deal with people. Because if anything, you know, you could buy your shoes on. You can barely buy shoes online without going, well, I have to do Prime before I buy, right? So I have to order 3 pairs of shoes so that I can send 2 of them back, right? You're not gonna sit here and go, that house looks wonderful, I'm gonna buy it.
I'll buy 3 of them and see which one works.
But like, because it's like, oh, what if there's something in the wall that you didn't notice and you're walking through the house and like you can't do it. And you know, we've done it now with cars and things like that. But if you buy a new car, it's easy. Right, it's comes straight off the assembly line.
I think what Zillow has done with the iBuying program, right? They lost, I think, $300 million in a quarter.
Yeah, just in the best real estate market that we've seen ever.
So it's just tough just to use technology to do this.
That's it.
Their algorithm faked themselves out. They basically like faked themselves out of pricing. They outbid themselves, and then somehow when they sold it, they sold all that stuff as a loss, which was very confusing to me and how you could do that in your own market.
I mean, look, the reality is real estate is just messy. There's a lot of moving parts. It's not clean cut or straightforward, and it requires like real human engagement, because the one thing I always try to do with every client is, you know, I start by managing expectations.
Right.
And I'm pretty candid about the fact that there's going to be some bumps in the road. Just be prepared for them because they're going to happen. Right. So let's not be surprised by that, because if you know what's coming, you don't have to be surprised by it. So let's know that it's coming and anticipate it, because that's just the nature of what real estate is. That's not something technology can always solve for. So I 1,000% agree with your point. It is meant to enhance, not replace.
Totally. And you know, I don't know if you're familiar with Open Door. There was going to be a thing that they were going to sell all these houses online, and it just seems like nobody's been able to do it, because I think there's something to the more complicated a transaction is, the less likely you're going to do it on your own, right? It's just our nature as human beings.
Yeah,
and we're just,
that's fair.
At some point, we're just going to be like, I don't know, I'm out, I'm done. There's too many things.
I'm going to pay a service for this.
Exactly.
Right? Our job is to deliver the service.
Correct.
Right? And that's what we always try to say is, you know, we always say that, look, you know, luxury isn't a price point, it's an experience.
100%.
Right? We're here to deliver a luxury experience.
Yeah, absolutely. And there's going to be questions along the way. Just like there's going to be questions in our job, right? When the market, we would tell clients this all the time last year. When the market's flying to the upside, we can all pat ourselves on the back and say how great we are. You know, everybody thinks they're smart. Everybody thinks they can make, you know, millions of dollars in the stock market. You could go on TikTok and, you know, find the latest person who's going to tell me what stock to buy and make a ton of money. But things are going to go wrong with your financial plan. And it doesn't matter whether you're invested in Apple or Google, you know, things are going to go wrong. Your financial plan is going to be in trouble somehow, some way. And if you don't have a plan, if you don't have somebody there to guide you through it, you are going to be in trouble. The housing experience is the same thing, right? If I go in blind, right, if it's a brand new build and everything was built perfectly, sure, it might be fine.
But still not.
The
number, look, the punch lists are always that much longer on new construction because there's just a lot of things that just got overlooked or didn't get checked. And that's just, again, just the nature of things. Whenever we sell a new construction to a client, we're representing that person as a buyer, we oftentimes submit a punch list that could be 5, 6, 10 pages long of little just corrections they need to make. Most of them are minor in nature, but still.
I know the best advice, give me a lot of good advice. One of the best ones, like, you got to be friends with your builder. Because
it's helpful.
It's just like shit is gonna go it's gonna be wrong.
Yeah.
There's gonna be something.
Yeah, I said to Tim, I was like, "You're gonna move in, and trust me, something's gonna break."
Yeah.
it just is. There's
And
too
it
many moving
did.
parts. Something's going to not work. It'd be nice if when you call, they answer.
Yeah.
No, that's great. Again, that's great advice. And, going back to your original statement, this is an advice business. This is a relationship business. And that's what's important here.
So speaking of this, I don't want to put you on the spot, but I am.
Here we go.
The agency just made a move in New York. You guys bought a company, and I think the whole transaction was really predicated on the fact, one, you wanted to move into New York and have more of a footprint, but also about technology. There's a data component to it and so forth. Can you talk a little bit more about that? Because that's fascinating to me, and I don't know how much can you say.
I can talk a little bit about it, not because I'm under some NDA, just because I can't speak on behalf of the agency here, and I wasn't, necessarily a part of that deal. But I know that, part of the acquisition was certainly because they're a tech prop company,
Right.
and their technology platform, I think, brought a lot of value to the table that in areas where perhaps we were lacking. I also think that, vice versa, our presence, our brand brought a lot of great value to them in areas where they may have been lacking. But we've been looking for an opportunity to get into New York for a while, but New York is not a market that you want to get it wrong.
Sure.
Right? Like the eyes of the world are on you in New York. You get it wrong in New York, and there's, there's going to be a backlash that can kind of, penetrate through other markets. So I think they were really calculated and intentional about how they wanted to get into New York by partnering with someone that already has an established presence, and then essentially kind of using that company as a host to come in and really kind of plant their flag. So I think it's really exciting. I think that it gives us a greater tech prop platform, which I haven't seen yet, but I've heard great things about, and it allows us to really kind of paint the four corners where now it's like, okay, now we got New York, now we got Miami, we got San Francisco and LA, and now we got everything in between.
That's awesome. Yeah, awesome.
Which is how we're positioning ourselves. Is to an extent the world is flat, right? That we can transact now. As I said, I sold a house in Aspen last year. I sold one in Napa. I have a listing in New York right now. So although LA is my base, as your advisor, I can now help advise you anywhere you want to go through one of our partners, and it's exciting.
That's really exciting.
Is there any way that we could get all the paperwork down?
No, is the short answer. I don't know. I mean, there's so many. It's true. I do get that comment, especially from my international clients. They're just like, why is there so much paperwork? You're going to have to ask the attorneys at Carr. I don't know. But
although I am hearing that now you can do everything electronically. So
mostly, with the except, there's only a couple things that require a wet signature, like the grant deed. But aside from that, the vast majority can be signed via DocuSign.
That's a good step.
It's getting there. It's like a Dropbox, but they still have like 700,000 things that you have to put in there.
I know.
They're like, did you sneeze last week? Because we saw it in your bank statement.
That's what. Look, as I mentioned before, I was a mortgage broker a long time ago, and I got out of that business because that was driving me crazy. The sort of nonsensical questions of trying to keep everything in this perfect little box. And the number of times I was on the phone with an underwriter and uttered the sentence, "I'm going to burn the building down if you don't." Like, it was just like, it's just driving me crazy. The kind of stuff that they get caught up on. But, banks are starting to shift their position, right? Because we all know banks are in the business of lending money. If they're not lending money, they're not making money, right? It's like a shark. If you're not swimming, you're dying. So I think that they're starting to adjust some of their own standards and requirements. For example, I've seen the LTV requirement has gone down, where now they're not requiring people to put in as much of a down payment.
Really? Okay.
Yeah, in certain instances where it was like, okay, they're requiring, or I guess it would be LTV went up. It was an 80%. Loan to value. Excuse me. It was an 80% LTV, and now we'll do 85% LTV. Right? Where they're trying to say like, okay, we know rates are higher. We know less people are going to be able to afford to buy in, so we're going to try to compensate by, you not having to come in with as much of a down payment. That's a slippery
What could go wrong?
That's a slippery slope. I've certainly seen that play out before.
Remember the 0% down houses?
Well, listen, it doesn't matter what the asset class is. At some point, someone is going to do something wrong, and
it's usually the banks.
It's usually the banks. Now it's happening in the crypto market right now. We're starting to find all these.
We should have known. You should have when Crypto.com took over Staples Center and paid $700 million for the naming rights. That should have been the indication right there, right? In hindsight, I'm going to look at that as the high water mark for markets and go, that makes a lot of sense.
Yeah, that's interesting. Yeah.
Anything else that you want to tell us?
I think we covered a lot of ground here.
Yeah.
Look, I think that much like what you guys do, who you work with matters.
Yeah.
As like we all know a financial advisor, and we all certainly know a lot of agents. But I don't think it's difficult to distinguish yourself and to differentiate yourself just by being knowledgeable, being the expert, and just being the trusted advisor that we all, I know, seek to be.
Yep.
Absolutely. When I talk to you, I constantly do this, and I look at my own business, our business. When I would ask my clients, what is it? I like to do self-reflection. Why did you work with me? What is it? What do you think? And the one thing they would tell me over and over and over again is two things: is knowledge and passion. Right. And that's what I feel when I talk to you: knowledge and passion. And if you have that right, then you can't go wrong in whatever business you're in.
Yeah, John, you
100%.
have a big team. I know you work with people from all across. You sell homes, and I think you have a $120 million listing right now.
139 million.
Oh, all right, perfect.
You were way off. You were $19 million off. Like, if you think about that,
is that the most expensive house in LA, or
no? I think it's the third most expensive home in LA right now.
Oh, okay.
No.
How's that going?
Come on, bro. Come on, man. If you ain't first, you last.
As you might imagine, it's a small pool of individuals on this planet
like 5 people
that can afford to buy that house. So it's not exactly one that we're showing every day of the week.
It's just about one.
And Bezos, unfortunately, is no longer on that list. Again, obviously, you're fishing in a very small pond when you're dealing with the type of people that could even potentially afford to buy a house like that. And the irony is that if you could, it's still not going to be their primary residence. Yeah. It's going to probably be one of their 6, 7, 8, 9 that they have just kind of all over the world, and that's the nature of
nice summer home.
It's the truth. Look, the biggest homes in LA, if you drive through Beverly Hills and Bel Air, are usually the ones that are vacant.
They're vacant usually.
It's amazing.
It's true.
Yeah. And I just got back from Italy. We talked about this, and we took a boat out on Lake Como, and I'm obviously fascinated by luxury real estate, and we're having the guide point out like these, the biggest villas, and he's like, corporation owns that one. Big family owns that one. No one's ever there. That one they only lease out for weddings and events. Really? Like, a lot of them sit unoccupied, which is kind of sad and tragic, but it's the reality of
really
just the wealth controls the vast majority of it.
Yeah, absolutely. That's the way it works.
So still very bullish on LA. This is
overall,
a bump in the road.
Time,
overall bullish about LA. Look, we're in for a little bit of a rocky road here coming up. There's going to be a little turbulence, and I think just knowing that, expecting that, so again, we don't have to be surprised by it. I don't, just the same way I don't ever like to overpromise and underdeliver with clients. I don't want to do that in my prognostication of what I think is going to happen. Right? I'm analyzing stuff in real time.
Right.
I'm not predicting 6 months out. I'm telling you what I know right now, and all we really know is here and now.
Yeah.
Right. Awesome.
Yeah, thank you for always being authentic and really candid about some of this stuff. Because I don't think anybody has a crystal ball, and as you said, we're just navigating these rough waters, and we'll get through it. So
we'll get through it. We always do. It always feels like you used your turbulence. It always feels like you're going to fall out of the sky when you feel turbulence, and when turbulence gets bad. But in the end, you're going to get there.
Yeah.
Sit back, have a drink. You're gonna get there. It's fine. It's all good.
Right. Thank you, John.
So let's go. What is your YouTube show again? I know you have a show that
it's
you have.
called
It's called
Wine and Wisdom.
Wine and Wisdom.
Yeah, where we just
fun.
Just talk about two of my favorite things, which is wine and real estate. So I get together with some my favorite people in the industry, and we open a good bottle of wine, and we just shoot the shit and talk like we are today about just what's happening in the market. Awesome. And then, of course, we have the Netflix show coming out this fall, Buying Beverly Hills. And my handle on Instagram is just Jon Grauman, my name. And that's it.
Awesome. I was sad that we didn't get to do the wine thing, and I didn't get to. I heard you l'chaim somebody last week. Yeah, you did. There was some Jewish stuff, Hebrew stuff, being Israeli.
I think your partner did.
Adam.
Being Israeli, I was like, I was looking forward to that, but no, maybe next time.
Next time.
Thank you again for
my pleasure.
Cheers,
guys. Thanks for having me.
All right.